you probably didn't get a chance to see any of. Welcome. It's great to see you, Bill.
Thanks, Joe.
I don't know if you were able to catch any of the show earlier, but we've been talking about private equity and where individuals are. Whether it's always the question: are you harvesting? Are you investing? Are you planning harvesting? What's the difference? And we heard harvesting, but you have a more advantageous model, and you pointed out a lot being a sort of family run. You're not always in one or the other mode. You can really be long-term family type investors. So is it different for you?
Exactly, Joe. Half of our capital comes from wealthy families from around the world, which gives us a longer-term orientation. Our hold period's more like 5 to 8 years versus 3 to 5 years. And that lines up well with our growth investing mandate. We're focused on innovators, growth companies like Uber, Airbnb are both in our portfolio. And we're doing a lot outside the U.S., quite a bit in China, India, Brazil, where we're actually still quite constructive on emerging markets.
Your returns are solid. Is that part of the reason, would you say? You don't have some of the same forces bearing upon you from other, you don't use closed-end funds to the same extent, right?
Yeah, I think the thing that's helped us is that we're leveraged against two, I think, of the more fundamental trends going on in the world. One is the move to a digital economy that's happening across the world and across sectors. And secondarily to the emerging markets. I mean, if you look at the growth that's happening, the creation of a very large middle class, particularly in Asia, that's going to drive growth. And if we can tap into those secular growth trends, I think we can still generate returns, even with volatility.
You better have a long-term outlook.
Absolutely.
With both of those, and that gives you're afforded that benefit from your
having long-term capital. Emerging markets for sure. I mean, it's a volatile place to live. But if you can take a 5 to 8 year view, some of those longer-term trends, like the growth of the middle class, I think come through.
So, where are you right now? Are you in you're always in the planning phase?
Well, you asked a great question about harvesting versus investing, and if we look back at 2018, we liquefied about $5 billion of capital from our portfolio, but we invested $4 billion, and about half that was in the emerging market, outside the U.S., but the big chunk in China and the EM.
What did you liquidate to get that?
More of our U.S. investments. We felt the U.S. was more fully valued, and we thought emerging market was more constructive.
You were doing that at the beginning of the year or last year?
Throughout the year, actually. We stayed pretty consistent through the whole year. We had a good fourth quarter, but we started, Becky, early, and we just continued.
And what's the expectation for 2019, especially given at least the expectation, and who knows with the government shutdown what's going to happen, but with Uber potentially going public this year, and maybe Airbnb as well. So that would be two biggies for you.
Absolutely.
That gets into the harvesting part of the story.
Exactly, Andrew. Well, thank you for asking that. We came into the year thinking we were going to have an IPO renaissance this year. You know, we had a lot of our larger cap companies that had really delayed their IPO plans, were really gearing up. The boards had really planned. They got their governance in place to go public. The shutdown was a little bit of a monkey wrench here in terms of timing, but I still think you're going to see some very high-profile IPOs out of our portfolio. Airbnb, Uber, Squarespace is coming. These are all terrific companies, and I think they'll be well received by the market and create some excitement, actually.
Is there any issues with the volatility in the market that would potentially slow? I wouldn't guess it with some of those big names, but overall, any other names in your portfolio that might be impacted by just the volatility?
Yeah, I think so, Becky. If we have volatility like we had in December, I mean, all bets are off. Yeah. I think at that point in time, it's very hard to have a constructive IPO market. I mean, moderate volatility, a 15 VIX is quite good for an IPO, the IPO investor. 20 is not. So I think if we sort of say not too hot, not too cold, we should have a pretty good market.
When an Uber goes public, for example, or an Airbnb goes public, for example, how much do you sell at the IPO, and then how much do you sell over time?
We typically do not sell at the IPO, and if we do, it's a very small percentage of our holdings. And our average has been to hold 2, 3, 4, 5 years after the IPO.
So you expect to continue to be in these stocks for a very long time?
And be on the board, and be a constructive shareholder, hopefully continue to add value. One company that I know you've talked about, IHS Markit, we held that stock for 10 years and about 5 years post-IPO. So that's been our history. And as Joe started with, it starts from having a capital base that allows us to be longer term in orientation.
China's big for you, and that was obviously things have changed.
Yeah.
There's an article in the Journal today that the hard landing fears are getting heightened, the probability of that, not from the trade, but from something China's doing itself with shadow banking and shrinking certain, trying to rein things in. But the very real prospect of a hard landing is have things changed on your outlook for China?
We're still bullish, and I'll tell you why, Joe. I think you have to see China in a more complex way. There's part of the economy.
Is there any other way?
Well, yeah, it's hard to know. But I would say part of their economy is, industrial, export, infrastructure driven. That part of the economy may well be in recession, and it's definitely growing at a dramatically slower rate. The more the private sector, consumer, services, tech, innovation-oriented the economy, it's still growing. I've talked to a number of CEOs here during this week, and you've had them on the show. They're not seeing a slowdown, particularly the consumer companies. P&G had great numbers, partly because of China. And so I think you've got to be in the right place. If you're in the wrong place, if you're on the export side, you're going to be hurt. But if you're on the services consumer side, I think you can do quite well.
So the move that you talked about we've heard, what's the theme this year at this thing? The fourth
industrial revolution.
Everybody that comes on here talks about digitization, and you said it. How long is it going to take before it pays off for you, do you think? It's paying off right now.
I think it is now. I think you have to look at industries like take transportation. How Uber is transforming transportation in a fundamental way. Airbnb is transforming hospitality in a fundamental way. And if you just sort of work through industries, you're seeing just significant change. Netflix transforming the entertainment industry. And I think you're going to find that very few industries are not going to be impacted by digital. Financial services, I mean, look what PayPal's been able to do.
Is there any concern about regulation? Because we talked about that earlier with another guest, just the idea that regulation is going to come on the rise. This digitization is really upending industries, and it's done it without the regulators catching up to this point. I'm thinking Airbnb and Uber in particular.
I think it's the single most significant risk, Becky, around investing in tech right now is regulation and re-regulation. And you've seen it with the European Union. You've seen it all over the world, basically.
Right.
And I don't have a great prediction of how it's going to play out, but you can feel it on the hallways here at Davos. The regulators, government leaders are really much more interested in what's going on in the tech sector than I've ever seen them before.
You bullish on the U.S. though, in general?
I am bullish on the U.S. I think people are too pessimistic, even here in Davos. I mean, a 2% to 2.5% growth economy is very constructive. I mean, and as you said, Joe, the earnings that just came out over the last 2 or 3 days, very, very good earnings off
First
Q4.
quarter's always bad, in terms of GDP, and now with the shutdown, I mean, when we print a 0.5 or something like that, you're going to be like, oh my God, the tax. Oh,
Bill, does that mean you're investing more money back in the United States out of some of these overseas markets? I mean, if you still like the emerging markets, you think things are good for the U.S., but not enough to put your money there?
I'm still more bullish on the emerging markets. I mean, we didn't even talk about India, but I think one of the quiet themes here is how well India is doing and is poised to do the next 10 years. One just quick anecdote. I mean, their GDP per capita right now, $1,800 per person. Sure as we're sitting here, it's going to grow to 5,000, 6,000 by 2030.